hour. Chris Pulver here. It's 3 p.m. on October 2nd. Let's have a look at everything today. Hope you all had a good day. Just posted a little summary in my Telegram. SPX today, 2 out of 3 winners. Nike for a winner with earnings. Added some profit levels on the following tickers: Alibaba, Baidu, FXI, JD, KWeb. If you're following those tickers at all or symbols, that is a China-based basket. I'm still looking for more upside. I'm letting them drift. I want to walk through those today. I'm also adding some profit targets on AT&T and Pfizer. I've been in those for a while. They're starting to push up nicely. I've collected some sweet dividends over the last couple of years, and bought in near the lows. So those are working out okay. I think Pfizer has some more upside towards the mid 30s. AT&T, if we get to $24, $25, I'm pretty happy with that. I added some new trades to Boeing today. As I mentioned here, China run is playing out nicely. There's still more upside to it. I think we're going to have another 30, 60, 90 days of it. Gold and silver still look very attractive to me for add-on trades and building additional positions on GLD, SLV, GC for gold futures, and SI for silver futures, as well as Bitcoin-related assets. I'm in BITO, IBIT, MicroStrategy, and I think that's it for right now. And of course, I have like Bitcoin holdings like off the cold storage units and off grid, whatever. But as far as investments and trading with a stocks and options account, BITO, IBIT, and then MicroStrategy. So there we go. I was taking a look at some other futures, reviewing, bonds today. We have the yields that are up. Actually, the 30-year, 20-year, 10-year up 1.3%. We have the 20-year bond TLT dropping by another 0.8%. This is probably not what traders, investors are expecting after that big front run with rates dropping or yields dropping and bonds going higher. I did exit my TLT position for some nice profit. I think I had about $16,000 or $17,000 at one point around the $101 highs, and I exited when we revisited the $100 mark. So I got out with about $12,000 profit on TLT. I'm no longer holding. I like the symmetry play towards 105. But truthfully, I'd rather take the capital that was invested in bonds and I'd rather put it in gold and silver. So I think that to me is a better play than U.S. bonds right now. Looking at some of the Mag 7 stuff, we have Tesla down over 3% today, Nvidia up 1.4%, Netflix up 1%, Microsoft down, Meta down, and Google down slightly, fractions of 1%. Amazon's flat on the day, Apple flat on the day, 1/3%. China, let's take a look at China stocks. So HSI up 6.2% for the day, Alibaba 1.3, Baidu 3.4, FXI 5.74, KWeb 4.94, JD up 2.9. There's a big pullback on some of these China plays for today's price. So we had these huge gaps higher. JD, for example, is up almost 8%. 8.4% from close yesterday to gap up today, and it's faded a little bit. So I put on some Fibonacci's from the recent low we had back in September all the way up to these current highs. I will continue to make adjustments to this if needed, but I'm just going to look to see if price will come back a little bit lower. I do want to check these stocks on a volume profile here, so give me a moment. Let's take a look at Alibaba and see on the daily time frame anything. So you mean to tell? There we go. There we go. Okay. So what's kind of nice about this? This volume profile gives a pretty good indication of where we could be going, especially in the kind of empty pockets here. The empty pocket here, the empty pocket here. Price can move through these levels very quickly until we get to one of these peaks. And the big peak that I see is all the way up here towards 180. My Alibaba price target is 180 to 185. So I'm trying to stay long on Alibaba until we hit that level. So obviously we need to make some short work of these current levels. I mean, getting through this kind of $70 to $90 chop zone. We've made a nice rip towards the 115 to 120 area. Hopefully we can kind of breeze through these dips in the volume profile and get up towards one of these bigger strikes. There's also a pretty massive level of inefficiency right up here between like 140 and 160. So because we have inefficiency, we also have some of these peaks around 140, 150. I'd probably be at this point, if we get into this in this area here, then I'm probably looking at trailing stop losses to get protection in, as opposed to being like, oh, my break even's $80 and I'm up 100% and I'm not going to protect any of it. I'm typically going to protect a triple bagger. If I get up, well, I guess triple bagger might be 300%. If I'm up 100%, that's a double bagger. Then I will start looking to trap some profit. All right, so that's Alibaba. Let me take a look here at Baidu, same type of thing. Look at the volume profile, zoom out a second, get some context. We are making some short work above these recent levels. Clearing the 100 handle was big. Getting through to these recent highs. I'm looking at Baidu to continue up, hopefully towards like 150 or so. 150, the big peak that I see here about 160, 180. Um, there's some structure back in here on the technicals around 175 to 200. I like the trade up to 150, 160. I'd like to say that I'm willing to hang on to this trade into 200. But measured move wise, we go from low to high. If we have an equal low or very close to it, if this is trying to come back to this center high, I want to see if we just go up with a bull flag, go up again, and this starts making this run right up to that 150, 155 zone. It may be worth taking some profit here and then reestablishing new positions for this breakout, because if it doubles in size, then we're talking about a move up towards like $250 to $300, which obviously would be pretty nice. So there's room, and I'm going to continue to focus on that. FXI, same thing here. The big sticky points on the volume profile that I see on the FXI is right up towards the high 30s. We got 38.60 and $40 to $41. I like that trade. I like that trade a lot, actually, into $40. So we're trading around 35 right now. A bull flag or a little bit of a pullback, and then the next surge up to $40+. Starting looking to trap some profit. If we get all the way back to these highs, $50 is great, but you can see volume profile wise, this is what stands out the most. So there's still some more upside, some more drifts. If it happens without any pullbacks and zero bull flags, that's okay. But I think between $40 and $45, I'll likely be taking some profit on FXI. KWeb, let's zoom out here. This one hopefully has some good upside towards the 50s as well. See if this updates. Because right now, I mean, if this is accurate, this is a monster low volume area that if there's anything up here, that we could be gravitating towards that level after clearing out, clearing nicely above this 30 handle. So I would look back into this cluster where we had some structure right around $50. And it doesn't seem like this volume profile is giving me much to read outside of it's just kind of open space. So, I mean, I hope this is accurate where we're going to head up towards the high 40s or $50, reach kind of a sticky point here back in, looks like summer of 2021. And, also a really easy trade would be just take the high and the low and just see if we can get back to like a 38% Fibonacci or a 50%. I mean, those are realistic levels as well. So if we get to this level or this level, that's a great profit window to make sure you're protecting some profit. So, I still have some KWeb exposure off these levels here. I was looking for double bottoms, didn't get them. I'm long the shares. I got some diagonal spreads, and off we go. So there's some KWeb. JD, this one, see if we have some more readings to the upside on the volume profile. We cleared this really nice level. We also are getting into this kind of $40. Right now we're trading at 44.45 as we wrap up about 50 minutes to close day in the US. $40 was kind of blown right through it. So we had this, big $25 zone, $40 zone, and we're through that. If you're looking left on the chart, the next real cluster support and resistance is all the way back towards like $60. So again, if it's just bullish pause and more upside, $50 to $60, I'm probably taking some profit. Even if we looked at this from a wave cycle, if this is 1, 2, 3, pause for 4, 5, I'll get the measurements out. I'll look at all these sticky points here, look at a volume profile peak. Probably $60 looks pretty good to take some profit. My break even is 32.50 on the shares that I own. I also have like sub 20 credit spreads and ratio spreads and naked puts and all sorts of stuff that's just income generating that are mostly in profit. I'm just going to let them probably go all the way to the finish line late this year. It's basically November, December, January, all my expirations on some of these China plays. So we will see if this market is just going to be in pure melt-up mode with China and the U.S. To finish out the year. If we go into the volume profile on the U.S. market, here's the SPY. Let's have a look here. Let this update. We are in some interesting spots on the volume profile. There's kind of a gap in here with a spike around 571 and a spike back around 562. So if I'm looking at a couple of key levels with, open interest and order flows and things like that, 562 and 571. All-time highs on the SPY, I believe, were like 574, 575. Take a look at that here. So that chart alarm's 575 to the upside. And if we are trying to get back to that FOMC low from last week, Wednesday, that would be around 561. So from what I can read here, peaks around 562 and another one right around this 571. So I'm looking to kind of position accordingly. I've got a couple of broken wing butterflies on the SPY out for this week. They haven't been filled yet, but I'm looking to see if I can get a high reward, low risk, 70 cents on the dollar type trade. And that's pending for tomorrow. The next data point, today is Wednesday. The next data point is going to be unemployment claims Thursday morning. We also have services PMI numbers tomorrow morning, and then Friday's non-farm payroll. We'll see what the U.S. is going to give us for job numbers, labor participation, unemployment rate, average hourly earnings, and see if the market is satisfied or not. We'll find out. So that's the SPY. Take a look at the NASDAQ. NASDAQ right now, just looking at some volume profile. We are trading at a pretty decent peak. Let me see if I can zoom out and get a little bit more context here. So a decent peak right around current price at 482. This does look like a bit of a controlled pullback. I mentioned this yesterday. I kind of like the analysis here. Unless we are just going to blow these tops off, this could be something like so, where we deal with some controlled pullback here, just a little bit of a drift back down, but still able to make higher highs and higher lows. If we have a higher low and then another push to the upside, that's the attempt to get to the all-time highs again on the NASDAQ. If I'm able to get a chunk of that or nice participation in that, let's look at it. Let's look at a percentage here. Let's say we get a pullback and we revisit all-time highs. You've got about a 6% upside in the index, which could play out pretty nice. And, from there, I'm wondering, do we actually form a top and then start working our way back down? Or do we blow this thing off and, SPY's pushing 6,000 plus or 600 plus, S&P is at 6,000 plus, is the QQQ going to get up above 500 and revisit all-time highs again? Anything is possible. I think as long as the U.S. data doesn't disappoint, China stocks stay, in flow and pretty much in this liftoff mode, the path of least resistance would still be up. I could pull a couple of seasonal charts as well. It's not that hard to see if I just pull something here seasonality-wise. Let me grab something here for the last 20, 30 years. Give me a second. Got it right here. Just got to go find it. Come on. Here we go. Okay, so I've got this little seasonality pull for the S&P right here. So this is aggregated for the last 20 years and essentially all the ups and downs and all the bulls and bears, and this is the market seasonality. So in an up year, I actually listened to this in a podcast yesterday, in an up year where we are up 20% from this, from the beginning of the year to this point coming into October typically averages a pullback of 2 to 3%. Okay, now 2 to 3% in the stock market is a pretty big pullback. I know in being up 20%, pulling back 2% is not that big of a deal, but the way the market treats a 1% pullback, a 2% pullback. Look at how the market was panicking right after Labor Day with that 3-4% sell-off. So anyway, 2 to 3% just offers a bit of a dip. September usually has the downward movement. We did the opposite this September. This September, it was actually pushing back up towards highs. And so if October gives us a dip and then October, November, December, we find some footing, find some traction, we get through this U.S. data, get through the election, I would say the market is looking for every possible reason to just continue to go higher. So does it feel like super bullish and confident? I would say I'm looking at 70% that I would guess if I'm going to put a percentage down, a probability. 70% in my experience, I'm looking at, I think the market's going to try to find a way to go higher. As much as it possibly can, it's going to try to go higher. The outliers that we might end up, I don't know. I mean, does anybody know what's going to happen? No, nobody does. So I'm still taking some stabs at the downside, just making sure I'm protected in case something silly happens. But based on the structure right here, this high, we have room to get in some open space. If we look at the, just the simple moving averages here, oops. If I go to a 200, 150 moving average, I mean, we could still find some really nice support. We come back down to this 50 period or this 100 period or even the 200 period. I would still look to put in some credit spreads on all of those levels. And I do like that trade. I like that trade a lot, actually. So it doesn't seem to be super challenging to just take a trade, you know? So if we pull back, I'm looking to buy some dips. I'll look to protect the downside if possible. I'll probably do a lot of dip buying with credit spreads, which doesn't mean I'm buying. Obviously, it means I'm just generating some income. If price goes higher, I collect the income. So that's the plan, and we'll go from there. So that is the SPY outlook for me. The Qs, same type of thing. There's pretty good structure in this like 50 to 100 level. I'd like to see the 50 and 100 moving average get tested and then maybe pop back above and then look at some option trading to get back to this recent high, possibly make a run towards these all-time highs, which would, like I said, be about that 6 to 7% move to the upside. If we pull back a little bit deeper into the 200, just like we had August 5th, same opportunity to look for a chance to buy. I talked about this morning during one of my live sessions. The Russell, also an opportunity to buy. I don't think I'm going to buy the Russell at the 50, but if we come back below the 100 and back above it, or back below the 200 and back above it, I'll probably take a stab at the Russell to buy and try to get back to these recent highs. If that's what we do end up seeing on the Russell, that's not a bad spot. Let's say we hit the 200 EMA and we get back up to these recent highs. That's a 9.7% rally to this high from for September, and then the July high is about 11.7%. So not too bad. I mean, that's offering some upside. If I get 6 or 7% on an index like the Nasdaq, get 11%, 9 to 11% on the Russell, not too bad. The Dow is tightened up here near the upside. I see a lot of resistance up here. Same type of thing. If price pulls back to the 50, does it offer a dip? If price pulls back here to the 100, it offer a dip. Okay, all the way back down here does offer a dip. I'm going to take some stabs at these levels and see if this market is still willing to buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. Keeps happening, right? So if we pull back here, it might be all we're offered, and then the market goes to make new highs. You can generate some income there. So that's the plan that I'm looking to do. Okay. All right. So a little bit of activity there on the U.S. indexes. Volatility today has retreated somewhat. We had highs above 20 yesterday, and we're back down to 18.84, down about 2.25% on the day. Dollar index, we've had a big rip on the dollar. Currency strength chart was wild today. We saw the Japanese yen super, super weak. If you look at you've got about a 200 pip move on the dollar yen, about a 200 pip move on the Aussie yen, 150 to 200 pips on CAD yen, pound yen. Just a kind of ridiculous move on the Japanese yen today. I'm not interested in trading it. I think it's just like a circus right now in the Japanese yen. Trade at your own risk. Enjoy the craziness, but I'm not that interested in trading the Japanese yen. The dollar, I have been warning traders for weeks now, don't take the bait on a bear trap. And that's exactly what we had happen here. So this bear trap, after a week or so of just testing, you could see that it couldn't break out. It didn't break out. And then we had 3 very strong days to the upside, which is just showing that the range lows have been holding. All right. This doesn't mean that I'm bullish on the dollar unless I'm short-term scalping. What I am looking for on the dollar is take this area, for example, take this recent high to low. Okay. And if we pull back into, let's say we pull back into the 382, let's say we pull back into the 50. Well, if that gives us resistance with confirmation to sell, I wouldn't mind looking for a sell trade and then resuming a retest of these lows. Now, whether or not that becomes a push and follow through to the downside, I don't know. But if we get a chance to sell at the 382 or a chance to sell at the 50 with confirmation, those are 2 levels that I'm watching, right? The flip side in the near term could be something like this. If we have a structured move on the dollar where it comes back down to retest and then gives us a higher low, this dollar may still make a swing to get back into all of this structure right around this 103 to 103.50 zone. So there may still be a chance for the dollar to get a little bit stronger let's say over the next month as we come into the election. But something tells me past the election, if the market's excited about going higher, the dollar's likely going to get hit harder. So any type of movement on the dollar to me is short-term bullish, looking for opportunities to resume downside. Okay. I do have a pretty wild, let me see if I can find the screenshot. This was in a tweet yesterday. Hang on a second here. I think I have the comparison of the S&P. If you compare it to, yep, this is crazy. In real terms, adjusted for the weakness of the dollar, the S&P is no better off today than it was in 1997. So based on the lack of purchasing power or loss of purchasing power, it's the same since 1997. So gold has been outperforming the S&P this year, and gold has been maintaining its ground where, gold has stayed pace with the S&P, and also loss of purchasing power in the dollar, gold is outperforming. So basically the stock market exists in real terms to just stay up with inflation. Another reason that, it's a wise thing to be invested. So I've got this screenshot here. Let me see if I can share it. So I will email this to myself and then I'll share it. Okay. So SPY and gold. All right. Sending that right now. Okay. So that's my outlook on the dollar. Oil, 70.47. We're getting a lot of volatility in oil. Middle East escalations, it's not the end of it. I don't know if oil is going to continue to be choppy and volatile. If there's more pressure to the downside, there's no trend line break. There's no higher high yet. I mean, the last time we had a high that was reasonable, I wouldn't even say this is the high that's reasonable. I would say that this high or this high is what the bulls are going to have to come after to stabilize oil prices. So if we have nothing more than this was a slide, this is a pullback area, just watch oil prices, because if we're really choppy here, this might be setting up a bear flag, which I know seems to be lows and at support. But I don't like the way this looks if it's going to be correcting like this. So if we have this slide to the downside and it's just barely eking out these slightly higher highs and higher lows, it looks like the bigger swing and pressure could be a break of that 65 support. So two things. One is if oil makes a nice big push up towards $75, $76, that kind of puts a little relief on the support zone. And that's fine. I mean, I have a $65 put on CL, and I've paired that with a $55 long put as a hedge. But if I can turn this $65 position into profit, I will do that. So I'm watching those levels closely. And then on the upside, there's nothing else to do. Like, I'm not interested in doing anything in the middle. If we have pressure to the downside, I might take my oil levels and roll them out and roll them down, and see if I can do that without taking a massive hit. So I will be tracking, the credit situation if I end up rolling the CL contracts that I have. Natural gas has been outperforming oil by quite a bit, and I do think this is a head and shoulders pattern. I've said this for the last couple of weeks. This to me looks like a head and shoulders pattern. I really hope that natural gas doesn't just break and go. Okay. I would like to see natural gas, if it's going to get a little trickier on the right hand side of this, or the right shoulder, I'd love to see something like this. We set up some type of wave structure where we can end up participating at this right shoulder or at this neckline, and then get the bigger move that comes up into these levels back here. So I'm hoping for a pullback on natural gas towards about, let's say low $2. If we hit $2, I'm probably going to take on some options with NG for natural gas futures. Okay, gold and silver. Let's take a look at gold and silver. Gold, just off the all-time highs. We had some geopolitical escalations yesterday, so gold was up yesterday, but not enough to break the highs. I keep looking at these simple moving averages, the 50, the 100, the 200. All I want is a pullback on gold. If I don't get one, it's okay. If gold just rips higher, it's okay. I'll just let my profits run. My positions on gold are still doing pretty well. If I just go to the overall portfolio here, so I have GC that's up around, this is out a little bit further. This should be plenty profitable, but so it's up $1,000 there. That's the only futures trade I have on gold. All right. Well, that's what I'm looking to add contracts with. If I get a pullback on gold, that's what I'm looking for. And then I would say gold there. GLD is another one, which right now GLD is up around $11,000, $10,700. So that's it. I don't have a ton of exposure. I did take some profits earlier in the year with those diagonal spreads that closed out when gold made that first rip in Q1 and Q2. So I'm out. But GLD, I still want to add to it. GC, I still want to add to it. I'm just trying to be patient and not chase highs. And then silver is a little bit different. Silver up a decent amount here. Here's about $8,600 in silver futures and around $38,000 in SLV. So I have exposure. I'm looking for add-on trades. I like both of them still. Collectively, if I could get, SLV and GLD to pay me $100,000 or better, I'd be pretty happy with that. I think it's worth taking some profit, or at least managing some profit at those levels. But I'm just going to let those continue to build and offer some dips and pullbacks, and let's find some levels to participate. So pull back towards the 50 period or the 100 period. Look at gold here for the last 200 plus bars. I mean, the 50 period is at least offering some nice dynamic support. Looking for the same thing here. If I go to my volume profile on, let's go to GLD here. There's probably not much to the upside because we're at all-time highs. But I want to see how it kind of overcame these areas. I mean, the next big sticking point on GLD is nowhere. I mean, we're so far above where this volume profile had all this consolidation in the 170 to 190 zone. There's nothing up here. So the good thing is having nothing up here, but having no sellers just means that this can stay in orbit for longer. And, I think 300 on GLD or 3,000 on gold for a spot price is a pretty good target. I mentioned today in one of my live sessions, and I think I mentioned this yesterday in one of my videos I posted on TradingView and Twitter and YouTube, that if we get a rate of change that continues to get more aggressive, and I see that it's stretched away by 20+%. So if we go from a distance of this 200 EMA up about 20%, right now that puts us around $2,800 for a spot price. If we go between 20 to 25%, I'm not calling the top, but I'm going to be moving my stop losses to trap some profits, because if this starts to look parabolic and we have a decent distance away, a lot of times there's an elasticity to the market where when it breaks, it tends to snap back. And especially the longer and higher and overstretched it gets, that typically doesn't end with some type of really easy, controlled, organized correction. It usually goes up and then breaks something and then comes back down for a cup and handle. So I obviously don't want to give back profit on some type of massive reversal pattern. So if this just keeps going to the upside and keeps melting up higher, I'm just going to keep following along. But I will be tracking to see how far away am I percentage wise from my 200 moving average. Because if it's over, I would say 20 to 25%, and definitely 25%, I'll be starting to look a little bit closer. And the reason I say that is I just go back in the chart. You can do this on any stock as well. I mean, there's no perfect number to it. But if I look back in time, how often have we seen gold stretch away? And right here, it's not a big bar count, but we had a test of the 200 here and then a rip to the upside. Look at the percentage here. From this high down to the low was about 17.6%, and that was actually a top. So we stretched away about 17%, and we started to work our way back down to the 200 EMA. Price starts to work its way back down. The 200 EMA catches up with price action, and it finds it, and that becomes dynamic support. And there's another bullish pattern sitting inside there. We go back to this area, another stretch where we were way far away, and we actually put in a nice little low right there. And you can see from this low to the 200 EMA, we're sitting around 27% distance away. So I'm ballparking it, but I would say about 20% seems like we should pay attention. 25% seems a little bit extreme. Here's another example right here. Okay. We went all this time, we stretched out 600 bars before we found the 200 EMA, which is a long, long time from going to kind of balance the market. But also interesting is once we had this big capitulation move to the upside, look and see how far away that move was. Right around 20%. Okay. So I think 20% should get our attention. I think 25%, if it gets that way and we overstretch, that's good for looking to protect some profit. But yeah, just a ballpark. So that's what I'm looking for. I hope we do have a pullback before the election. I think that'd be a nice little spot for a pullback. And it'd be nice to happen during the month of October. See a little bit of a pullback, let the dollar pull back as well. And from there, we look to see if we can get some participation at the 50 to 100. I will probably add some GC. I'll add some GLD, SLV, SI. I also have PHYS. This is physical gold, and we're sitting here at 20 bucks. And then I have CEF, which is physical gold and silver. So I am long on all of these different assets. And let me see, I think I bought some shares on those. Let's go to CEF. So CEF is up around $1,000 right now. PHYS is up around $800 right now. Just some unexpensive plays there. I have some shares, and I'm just sitting with 100 delta on those. And same thing on CEF. I think I bought some shares of that as well. CEF, bought some shares. Yep. So 100 shares on each one and looking to hold. So some more gold and silver exposure. Okay. What are the charts you want me to take a look at today? Anything else? We went through the indexes, went through gold, silver. Haven't talked about Bitcoin, but I'm curious. Down to 60,000. Bitcoin is pulled back a decent amount off these recent highs. The market did take out a recent high, but we have pulled back in a jiff. That is a 9% pullback on Bitcoin in just the last 3 or 4 trading days. So, I wouldn't mind getting Bitcoin back down to 20 or to 50K. If we get to like 52, 51,000, probably putting on some more trades, maybe participating in BITO or IBIT. Longer term, I'm looking to see if these will head higher for the end of the year. Does Bitcoin get to all-time highs? We break 74,000. Where's the next spot? If this is a measured move, and this is all just hypothetical here, but if this is a measured move, I wouldn't be surprised if I take a box here from this low. Let's say we just measure Bitcoin just like so. So we have this low around 16,000 to this high at 73 and change, and we end up finding a low here. So if the low that we had on August 5th is the low, and this is the swing low, then I'd be projecting a Bitcoin move up towards 107. Okay, if Bitcoin pulls back a little bit deeper, and let's say we pull back to 50%, well, I'm projecting a symmetry swing about 102,000. Now, if this is all a wave 1, okay, let's say this is a restart to a wave 1. Wave 1, this is all accumulation for wave 2. Wave 3 is usually the biggest and most aggressive push. And then wave 4 to wave 5, we could still be talking about Bitcoin finishing way higher. So just because we hit 100K, if we hit 100K, doesn't mean I want to take profit. I think I'm still willing to participate until this thing ends up giving us a 5-wave move. All right. So as a trader, I'm looking at Bitcoin maybe up into the 120, 130 zone. And let me just kind of I'll just map this one out. So if I take this, let's say that's symmetry, and then we pull back towards past resistance, becomes support again, something in this area. I project, pretty conservatively a move towards like 132, give or take. So that's what I've been watching for, between 100K on kind of my first big speculative target, and then 125 to 130 on where I think it'd be nice to take some profits. Let's see, loses value, bad in options. What do you recommend using? So are you talking about being long the option? This is why, buying options is a losing battle. This is why if I'm buying options, I typically go out. I mean, I don't know. Long options are really, really price and time sensitive. So I mean, if you don't go out far enough, or price doesn't move, I mean, remember it's all the same. So it's not like BITO is different than anything else. You all have to compete with time. And if price is doing this in the underlying asset, that time and decay does not work in your favor, and it starts to accelerate about 2/3 of the way through the trade. It starts to accelerate, and you start to experience that kind of waterfall where you are getting less and less value for those options. So, we're trying to time it relatively right. We're not overpaying. We want to give price a chance to move. And, it's why it's helpful to do like vertical spreads and try to lower your cost basis. You cap the upside, but you at least have a slightly higher probability of profit. So yeah, long options can be challenging. So I'm mostly selling options on BITO. I own the shares, And so I'm selling options against the shares. I'm doing covered calls. I'm doing, naked puts to take on more shares. I'm doing credit spreads. I'm really just selling. So time is on my side and I can generate some income, lower my net position and cost basis. So my call options are out to, I think I went out to 2026 on BITO. Let me see. I think there's an expiration that's already offered out to that. Yeah, I can go out to January 2026. So, I mean, I don't mind this. I mean, we're trading right now at $17. If I were to buy in at the money, this is going to change here. If I buy in at the money, I mean, for $300 going out 470 days, if BITO, let's say we get back to the highs on BITO, and this happens over the next 6 months. Well, you have plenty of time, right? You have plenty of time in the stock. But that is the big question. Like, is there anything about this symbol right now that's giving you confirmation to buy and go long? I do have some puts in here. I'm hoping we stabilize. But if we start to see this behavior and we're breaking, then yeah, I mean, getting long and staying long until, let's say $33. If I buy a $17 call for a $3 debit, okay, that would give me $16 of potential movement, and I'd be buying at roughly a 50 delta. So I can turn a $16 move at a 50 delta. That gives me about $8 of profit on a $3 debit. That's over a 200% gain if I'm right. And I've got plenty of time in a trade like that. So that's one way I would look at it, is if I'm long, I'm trying to go out long enough, or if I really believe in a stock, then go out far enough in time that it takes a lot longer for that waterfall of time decay to work against you. So you have at least like this window to hold the value of your long option before you start to experience this window where that time really starts to fall and work against you. But you got to go out a little bit further for that, and it's not expensive. I mean, if I buy an option right now, I mean, even a delta of, let me see what the numbers is. I mean, trading at $17. If I buy like a 70 delta, so my break even would be $18.35 on this trade. And, I can also treat this as a diagonal spread. I can sell against it with shorter term sell trades as long as I know my break even. But if I was a break even at $18.35 and it goes up to $33, that turns a $15 profit on a $3.35 debit. It's pretty good. I mean, we net, let's say $10, $12, $13. That's pretty good. So anyway, a lot of ways to splice it. All right. I saw a couple of requests there. Mini NASDAQ. Okay. So the E-mini on NQ. Okay. I'll do that. Carla HON and PGR. All right. Let's have a look. So NQ. So right now in my futures feed here, we have been just hanging out around this weekly. This is a weekly anchor VWAP, this dark blue line. And, yesterday we busted through it, and then we have been holding this support level all week. So the top is my ES feed. The bottom is my NQ feed. Even right here, you can see that we are not really moving too far away from this current weekly VWAP. So, this low seems to be a good structure level, and this high where we sold off yesterday, we're right in the middle. So directionally, I mean, it's a bit of a crapshoot right now on the NASDAQ. I would be careful on positioning unless price is breaking today's highs and heading higher. Then we can head back up and kind of do away with some of the damage that was done yesterday. But if that VWAP holds as resistance, we work our way back down to these lows again. That's where I think the pressure is for this week, is possibly retesting those lows. So, but right now we're just sitting right around like snug to those the weekly VWAP, and I don't really get a lot of direction. So if futures is very quiet overnight, then tomorrow's news maybe breaks it loose. But I would imagine things are going to be relatively calm until non-farm on Friday. I know it's unemployment claims tomorrow. I know it's I think that's the big one. And then we have services PMI tomorrow. But for the most part, I would just think that tomorrow is going to be relatively calm until we have non-farm on Friday. Okay. All right. Yeah. I'm just curious, Gina, what's your expiration? You went out to January 2025 several months ago. Yeah. I mean, it's not necessarily you bought early. I just think you're not giving yourself enough time. Again, there could still be a rally, and Bitcoin could be one that rallies very aggressively. I mean, if it turns a corner and starts to rip, BITO could go higher faster, and it's very aggressive. Nobody knows. But if I was to take a trade now on BITO, I'd probably do long options out to 2026, because that way I give myself another window of maybe 5 to 6 months where I have that kind of firmer price in my long option, and I won't see it decay as much. So, and also, I mean, I'd like to think that as the Fed is cutting rates through the rest of this year and continuing to cut rates, or if they cut rates, depends on what inflation does, but continuing to cut rates through 2025, getting a weaker dollar will translate into better gold, better silver, better Bitcoin prices. And hopefully, that market catches bid. If IBIT, which is BlackRock's ETF, if they are approved by the CFTC for options, there's going to be a lot of activity in the spot prices. So, I mean, order flows have been all over the place. We've seen actually order flows going down because of what happened with. Now you have so many different options to trade Bitcoin. Not Bitcoin directly. That's, everyone can argue like it's not your keys, not your cheese. But there's ways to invest with more traditional vehicles like a stocks and options portfolio, and you can buy an IBIT that is basically backed by Bitcoin. So, and then with the options, you could actually own Bitcoin, which is kind of nice. So anyway, but it's made for an interesting dynamic. It's not just you got to own this weird key that goes in your USB. It's got a 50 word password. You got to keep it. Don't tell anybody, and just it's a little bit easier, and that's probably good for the average investor to benefit from some type of exposure if you're interested. I still think it's risk capital, and but risk capital, if I'm putting 5 to 10% of my portfolio into it, I think the upside of 100 to 200% or indefinitely is pretty good exposure. So I don't mind risking that in order to see if it pays off with the asymmetry. Okay, let's go back to Carla. HON. Honeywell. All right. I've looked at this one in a second. Let's go to Honeywell. HON. Checks a lot of boxes. High level of debt. Fed's coming down. That should probably help the situation there. Pays reliable dividend. Earnings forecast to grow. Trading well below estimated value. This could be a value play. Price to earnings, price to sales. Price to earnings, let's take a look at versus the peers. Is this comparable? Is this high end, low end? 3 to 3.6 price to sales ratio. Not too bad. I do like this. Current price 206. Fair market value based on discounted cash flow models 323. So what would I like to do with Honeywell? Honey. I'd like to see if we come back to like 180 or so. Now, I might be getting picky here, but if we come back down to like 180 or 175, I like this as an area to start participating. So rather than buying it now at 204, are we able to see price work its way down, get into a spot where we have lots of support since 2022 and hold this level and then go back up? If it's a range trade, I'd like to own it at 180, trade it up to 220. I don't have to own the shares. I can buy fractional and spend a couple $1,000. I can do credit spreads. I can do long calls. I can do all sorts of stuff to see if price behaves. There's a lot of ways to trade that. So I do not mind taking a look at the stock. And if we get to 180 to 175, I'll probably take a stab at something on that chart. So 180. If I wanted to, I could probably place a trade on this by the end of the year and do like a 180 by 175 and just put in a credit spread, try to get filled at a price that I want, and then be done with it. So I think I might do that. I might talk about this tomorrow. We got about 15 minutes for closing bell today. I'm going to put HON on my to-do list for tomorrow. HON to do for Thursday. And look at the option legs here. I mean, the bid and ask might be a little bit wider, but I can set the prices where I want. Let's make sure this is optionable. There we go. So HON. If I go out to the end of the year, we have a dividend on November 15th. We have earnings on the 24th. I mean, if I place the trade at the 180 point, let's go to like January of next year. If I go 180, these will update here. If I go 180 by 175, right now that trade is offering 55 cents credit for $5 risk. I'm not interested in that type of rewards risk. But if I did something, at the money, I mean, right now, I mean, again, this is not super wide. If I went down one strike, I was going to say we probably get a big drop off in premium. If you go in the money and you're giving this thing a $5.50 head start, you're getting some premium for that. For this is a $10 spread, you're getting $4.65. If I did a $5 spread, getting $1.65, I'm looking for basically a third of the width. So if I did a 180 by 175, I can't expect to get filled for $2.50 because even doing it at the money is unlikely to get filled. But I could put in a trade here for $1.50, $1.50 credit, and that would be $1.50 profit for a $3.50 risk. Probability of profit's pretty high if price comes down to it. I think that's a pretty solid support level, and we've got lows around the 170 zone. Maybe I look at this. If I did a 180 by 175, and then I go out another month to March, and I do a 175 by 170, same thing here for $1.50. I could probably combo those trades and try to get those things filled. Let's see, $1.50 on each. So 180 by 175, 175 by 170. If I get filled here for $1.50 on each one, let me see what this looks like. This doesn't give me a max profit. All right. I guess I just take the trade separately. So I'll put this one. This is on the to-do list. I'll walk through this one tomorrow. Maybe price this one out. I don't mind setting it up as a credit spread. So if we have earnings and price goes up, then I'm probably not going to get filled. There's no trade for me. If price goes down and we come back and we get into this area here, then I might do a ratio spread if the IV's high enough. I might just keep my credit spread. I think on the safe side, $1.50 credit out of a $5 risk is pretty reasonable considering what the profits are if you go at the money right now. You're getting about a third of the width, which I think is appropriate here. So that's right about that trade. So if I go $1.50, so $1.50 divided by 5 is 30%. That's a third of the width. Just a 0.33, right? So it's close enough. But yeah, I'd probably go for $1.50, $1.60 credit and try to put it in a spot that I think is where I'd like to own it, or at least look at a bounce and kind of put a line in the sand. PGR, Progressive. I talked about this one this week. I have no interest unless we got a freaking pullback. These things are nuts. Progressive and just everything that's insurance related has been just skyrocketing. I don't know what other stocks have performed this well since summer of last year. I mean, this stock is up 130%. Not a lot of stocks have done that. I'm not interested in shorting because I think these are just freaking cash cows right now, and everyone's paying an arm and a leg for insurance. Homeowners insurance, car insurance, whatever insurance you have, even medical insurance. If it's covered by yourself or your business or your employer, insurance is a joke. It's so frustrating on all fronts. So Progressive benefits from it, but I can't look at the stock at 253 and think I want to buy the stock. I want to pull back, right? I mean, if I get a pullback here, do we pull back? Do we pull back? Do we pull back? If so, I'll gladly participate, but I got to get something. I got to get something. So pull back to a 50 or 100, find some previous structure, and then give us a trade. Otherwise, PGR, as it looks right here, okay, tons of insider selling, which does speak volumes as far as what the higher uppers are doing. Earnings are growing like crazy. Revenue forecasts to grow, trading well below estimated value. I mean, it checks a lot of boxes. It's not super ridiculous when it comes to price to earnings and price to sales. Discounted cash flow is still undervalued. The question is, do you like participating now at 254, or would you like to pull back to maybe the 225, 230 area? For me, I'm more of the pullback guy. Give me the 235, 225 area. Then I can start looking to participate as we probably go up to that $400 price target. So I do like the stock. It's been one of the strongest stocks this year. In fact, I'm surprised. Let me see. How is PGR stock performance compared to the S&P, to others in the S&P? Let me see if this will tell me. 57.13. So we've got 82% the last 12 months, 57% year to date. Ridiculous. And that's old news. I might have to do like a chat GPT here, but I'm curious. I mean, it is a ridiculous performer. I'm just not interested in like I don't want to buy the highs. I don't want to say that I'm just going to participate here at the highs. But if we pull back, glad to participate. Pull back to 230, pull back to 225. So maybe it takes an earnings pullback. Not that they're going to miss on earnings, but maybe an overall like October sentiment pullback. If we get that, that's good enough maybe to buy the dip. So my thoughts at least. Okay. HUT. Let me see what HUT is. HUT. I haven't looked at it. I don't know what it is. I'm seeing data processing. I'll check the snowflake analysis here. Bitcoin mining. No thanks. I trade some MARA. I did some of the mining stuff back in the day. I don't know. I mean, it looks like we have some pumps in here from this, $8 to $9 zone up to $20, and then it takes profit. I mean, it could be something. I've looked at MARA. I've traded MARA. I ended up dumping those positions. The one thing I don't like about it is if this is tied to Bitcoin, okay? So it provides digital asset mining, hosting, managed infrastructure. If it's tied to Bitcoin, but it doesn't look like it's correlating at all, I'm not that interested. So to me, it's like if Bitcoin prices go higher, I want every asset that I trade that's attached to it to go higher. I don't want to see that Bitcoin goes higher to all-time highs and this hasn't done squat. And MARA, Marathon Digital, hasn't done anything. So if those correlations are broken, I'm not that interested in it, but I'll take a look at it from here, see if it shows up. Okay. So high-level non-cash earnings forecast to decline for the next 3 years, volatile share price. I don't know, man. It's a tough one to say that I'm going to justify buying it. I mean, it looks good as far as like PE and price to sales. Doesn't even have a fair value discounted cash flow. I'm probably going to stay out of it. I mean, these mining things, like, you never know. Could be good, could be bad. If they have enough cash to stick around, fine. But if they don't, I think that's the tricky part, is if they don't have enough cash or they're not going to sell their Bitcoin in order to stay afloat. I don't have any good outlook on them. Okay. All right. PLTRL Palantir. Yep. Right here. So we're up to 37.57. I have a 36 by 35 credit spread. I'm doing that with the intentions of owning it out to November. We do have earnings on Palantir coming out November 5th. And so if we get up to these highs, I don't have any shares of Palantir. I let them go on this first little run that we had in late 2023, which obviously was a pretty good pop, but I didn't hold on to it longer. I wish I would, but whatever. So credit spreads, some ratio spreads. Let me show what I've got here. So my positions on Palantir. So 36 by 35, I've got the 20, the 17, and the 15. Those are cash secured puts. I'm just looking to generate some income. So far, I'm up $1,500 on Palantir. It's a small position. It's mostly options, and that's kind of it. So I unfortunately don't have a lot of exposure on it. It's been a great performer. From this recent low, it is up 390%. Ugh, amazing. With fair market value in the 40s. So I think it actually is higher than that. I think it's up to 60 now, based on the discounted cash flow model. Let's see here. Profitable, earnings forecast to grow, trading well below estimated value. We're a little high on the price to earnings side, price to sales, but undervalued $50. So $50 to $51, pretty good price target. If I'm long, I'd be looking to take some profit if we hit those levels. And this could be a buy and hold for a while too. I mean, if they continue to get bigger, they did get into the S&P 500, so it's added a bunch of order flow to them and volume. So I think that's why the stock has also not really had much of a dip or a pullback. So I'll still watch. Like I said, with this 36 by 35, I'm willing to take some shares. If we pull back again, the 50, the 100, the 200, I would look to see if it offers up chance to buy, chance to buy, chance to buy, chance to buy. I mean, we're in a pretty healthy bullish trend. So we'll pull back in here, look to see if we close back above those moving averages, then make some fresh highs. That's a simple trend trade. All right. DFEN. I don't like the triple leverage stuff. I know this is aerospace and defense. I don't like the triple leverage stuff. I don't trade any triple leverage, single leverage. It's like if I'm doing anything, it's going to be single leverage, because these are prone to repricing and they're not intended to hold for anything longer than a week or two. So I don't trade these. I've been burned in the past, and so I just decided it's not worth the headache when, if you don't fully understand how these get repriced, you can easily lose and still be like, oh, look, it's going up. But based on your the repricing, the way that they treat these instruments, I don't like them. So, I mean, if there's a single leverage, if there's like a 1x aerospace, which there might be from this direction 1x, Let's go direction aerospace. So 3 times bull, 3 times bull, 3 times bull, semiconductor. I mean, these are all leverage, right? So, I mean, I'd be more likely to trade ITA for an aerospace and defense ETF as opposed to a leverage instrument. This is still up a ton. I mean, do I want to buy it at all-time highs? No, but I'd like to see a pullback to like a 50 and trade some options around it. Is ITA optionable? Most likely is. Okay. It's probably optionable, but I would guess monthly expirations and probably super wide. Yeah, October, November, December, it's monthly, and these are probably super wide. Bid ask, I'm going to see if this up. You're probably getting nothing for the. Yeah, they drop off really quickly if you're not in the money, or out of the money. So I would be probably not participating. Am I interested in a 565 move for Friday? I'm going to look at it tomorrow. I'm looking at tomorrow on my gamma squeeze and see if it's still there. Yep. So I'll if it's still there, then we'll talk about it tomorrow. But for right now, it's still there. It still hasn't been struck. We came pretty close to it today, but tomorrow's a new day, so I want to make sure that that is in fact a powerful level to kind of drive prices lower. And also, I don't know if it's going to hit on Friday. Non-farm payroll. I don't know. Maybe it goes up, and it's something we can look at for next week. So we'll see. If it looks good tomorrow, I'll take the trade. HWM. What is that one? Howmet Aerospace. I mean, look, all these defense and aerospace stocks are going up. I mean, I'm not interested in buying stuff at the highs. So give me a pullback, give me a dip, give me a 50, a 100, give me something. Pull back, buy the dip. Pull back, buy the dip. Doesn't have to be complicated, but I'm not buying all-time highs. So it's as simple as that. I like it. ITA, if it pulls back, that's an overall defensive aerospace ETF. Howmet, if I look at the fundamentals, maybe it's good. Okay, the real-time one is, yeah, Mark. It's not that different for today. I mean, we talked about the 565 earlier this morning. It came right down towards it. Obviously, I didn't take the trade right out of the gates this morning. And then later in the day, we just came back up and filled the gap and stayed there all day. So nothing really that exciting happened. Going into tomorrow, I just want to see, is this my level that if we come into tomorrow's trading and this is still very quiet and this is still lit up, that maybe we can see prices make their way down there by the end of the week. So still watching, but I just want to get kind of a nice visual proof that it's a good trade. So that's that. All right. Good stuff. So yeah, keep an eye. I mean, the defense aerospace stuff makes sense. Rising conflict in the Middle East. That is truly why I took a stab on Boeing today. I know that Boeing is not in the defense and aerospace arena. I mean, they're basically an airline maker, airplane maker that has done nothing right this year. But we're sitting here at what? I mean, from all-time highs to current prices, we've pulled back 65%. And if we pull back any lower, if we get back to COVID levels, that's a 79.5% pullback. Now, I put in a 125 by 120 credit spread that I'm waiting to get filled. And I also started a buy today. I took a stab at 154. I've got another stab at 120 and another stab at 100. I'm going to put in 3 small dollar cost average positions to basically buy these lows, and look to see if Boeing will get its crap together and start to look a little bit better as a stock. So, I mean, I don't mind it. And in the event that we're making more aircrafts, some of them for the military, this is probably a good thing. If we don't have any further lawsuits and all sorts of negative sentiment surrounding Boeing, then I think we could be going back up to 240 to 250. So I took a stab on it. That's my play right now in at least the defensive aerospace sector. But yeah, Lockheed Martin is the other one. So LMT, this one's up to all-time highs. It's just done blowing this market up. Same type of thing. I'm not interested in buying highs. So give me a pullback. Okay. I might be asking for a lot here, but if it just stays up here to these highs, maybe there's a bear call spread up here that I wouldn't mind taking. But I'm not going to get in the way of a rocket ship. Pun intended. It's like, my gosh, if this thing just keeps going higher, I can't sell it. But if it offers some type of pullback and some type of rebalancing, then let's look at the 50. Let's look at the 100. and see if this thing wants to come back and find some type of buy the dip. I mean, it offers it. Let's take it. So anyway, all right, closing bell. Happy Wednesday. Let me go ahead and check something on my Discord here. It does. Yep, it sure does. So Captain Goody asking me about trading on the SPY. Forex posted there. Stocks posted there. Options. I've got to answer Bo's question here. All right. Okay, any other questions? Otherwise, we've been at it for an hour for the final hour. We'll wrap things up, and we'll come back and tackle it all tomorrow. Okay. Before you go, if you'd smash that like button for me, hit the thumbs up on YouTube. That helps out the old YouTube algorithm. Let's hack the system. Type in a wire yes, type in a yes, type in a watch. Thanks for the session. Any comment helps when you're engaging live. And then if you want to leave me a comment or ask questions afterwards, if you're coming in to watch the recording, that's fine too. But comments always help. Hitting the like button always helps. And we'll get more people to join the channel. Cool. Thanks, Gina. Thanks, Gary. Thanks, Chris. Thanks, Mark. Francois. Sounds good. All right, everybody. I'll see you tomorrow. Thanks. Bye.